But I do want to get these things on your plate so that you know to ask these questions. My big thing is to make sure you as entrepreneurs know what questions to ask. And this is a question to ask because there are tools that the tax accountants have or that lawyers have that are out there to create these other companies under your umbrella that will help minimize the tax impact. And how they're structured, whether they're LLCs or S Corps or C Corps or sole proprietorships, those are all things the tax people can utilize to make sure.
Hi, I'm Pam Pryor, and this is the Cash Flow Podcast, where we talk about everything money related in your business. Without further ado, let's jump right in.
And welcome back to Cash Flow Podcast. So glad to see you this week. Big news for the top of the hour is all about Bitcoin. You've probably been hearing about it at the beginning of January 2024 because now there is something called a Bitcoin ETF, which has taken a long time to get approval. And that's a long story I won't share. But the bottom line is right now, even if you have nothing to do with crypto or Bitcoin, you can, through your 401k, through your pension, through any bank that's doing investing for you now, people can buy the equivalent of Bitcoin for you. It's called a spot ETF, and it's available now to the massive public. All sorts of things are expected to happen as a result of this. Now, what do I mean by that? If you look at Bitcoin, since it came into play a whole bunch of years ago, its price has gone up and down and up and down and up and down, and it's been very unpredictable. So it's what they call a very volatile asset, and it definitely is. Like, for example, it's gone from 20 down to 3, up to 11, down to 6, up to 64, and here I'm talking thousands of dollars. So at one point, one Bitcoin was worth $64,000. Then it dropped back down to 31,000, then up to 49, and then down to 17. And now it's hovering up in this $42,000, $43,000 area. So one Bitcoin has really quadrupled to 8 times in cost up and down during these last few years. It's what we call a very volatile asset. And now you and your investments have the opportunity to have access to it. Big note of warning here. This is not investment advice of any kind. And keep in mind, anything you invest, you can lose all of it. So know that going into this. This is not an advertisement for Bitcoin at all. This is just telling you it's available on a whole different scale. And you'll start to see them talking about it now much more on some of the news shows than they have in the past. So welcome Bitcoin to the era of spot ETFs. Now we are going to jump into the meat of the podcast today, which is all about organizational structure. Now don't veer off on me here, stick with me here, because I'm going to tell you a story that may just grab your interest. I know one entrepreneur who had a successful business, built it up into a multi-million-dollar company, and sold the rights to it. Okay, number one. And I have another friend, actually a client, who built up a business from nothing, multi-million dollars, and sold it. And in both cases, they sold for 8 figures. Let's just call it 8 figures. One of them, I got a call from after the fact, and they said, hey, I have a $500,000 tax bill I need to do something with because I sold this thing and I didn't do anything to mitigate my taxes. And therefore, he had a $500,000 tax bill. He didn't have the cash because he had taken the cash from the sale of his old business to invest in starting his new business with no expectation or understanding that that massive bill was going to hit. So that's thing one. Thing two, the seller of the second company started ahead of time with us working to say, okay, what do I need to do? How do I need to structure the organizational entities around my businesses so that I can make a tax maximized, minimized exit? And the difference in those stories is phenomenal. One person is paying $500,000 tax bill that they didn't expect, and another one mitigated the tax impact on their business by up to 50% as a result of one thing, structuring the businesses differently. So what I'm proposing here is the 3 reasons that you might want to do this. And these played out in both of the stories. Okay. First one's obvious, and we already talked about it. Looking at the organizational structure of your business will help you minimize taxes both in the current term and in the long term. And again, this is not tax advice. This is not wealth advice. You should always work with your own professionals before making any decisions around your money. But I do want to get these things on your plate so that you know to ask these questions. You know, my big thing is to make sure you as entrepreneurs know what questions to ask. And this is a question to ask because there are tools that the tax accountants have or that lawyers have that are out there to create these other companies under your umbrella that will help minimize the tax impact. And how they're structured, whether they're LLCs or S Corps or C Corps or sole proprietorships, those are all things the tax people can utilize to make sure that you're paying your fair amount of taxes, but not paying any more than you need to. So if you haven't addressed the organizational structure yet, you really want to do that. In one case, the guy kept his LLC and got hit for a bunch in taxes. In the other case, there was a whole setup of a management company, which might be a term that you hear, of a holding company, which might be a term that you hear, or an IP company, which might be a term that you hear. And one of the main reasons to do that is tax purposes. So one of the three, definitely look at an organizational structure once you start making money so that you can save yourself some tax dollars. So what's next? Why else would I do it, Pam? Big reason is insurance, right? And by insurance, I mean you're isolating any potential liability. So there are certainly ways that people can do what they call pierce the corporate veil. And if they, the IRS certainly doesn't care how your business is structured. If you owe the IRS money, you're going to pay the IRS money. But for other kinds of debt, or not just debt, but debt and potential liability, how those businesses are structured will determine how much insurance you have to get, number one, what your premiums are going to be. That's a big deal because those are expensive. But then it also helps limit, if somebody does sue you for anything, how far they can sue up into your web of entities. So this is another factor other than taxes that makes sense to sort of split up your liability, split up your risk into multiple entities. That's a second thing that structure can do. What's the third thing? The third thing that's really cool is as your businesses grow, and I just had a conversation with somebody yesterday about this, and they're like, I started this business doing A, and I think it was basically building a digital course. And I ended up doing train the trainer for corporate on HR stuff. It's like, I don't really quite know how I got there, but they're two very different businesses. And truth of the matter is when he goes to exit his business, they won't sell together. They have nothing to do with each other, really. So part of what he's doing is splitting it up into separate companies so that it can be, I don't even know if this is a word, modularized, but then he can decide which entity to keep, which entity to get rid of, put them together, take them apart. It just really helps separate them into sellable chunks, I would say. Or if instead of selling your business, you're actually going to grow your business, you want to buy companies to come in and tag on to what you're doing, it gives you the ability to put the right companies in the right spot without having it all mixed and garbled. So it gives you a real modular feel about your business entities that kind of lines up with how you think about the business. So those are the three reasons. The three reasons that organizational structure becomes critical once you start to make money. Number one, get that tax bill down to as low as it can get and still be fair. Nobody's cheating. Nobody's recommending that you cheat on your taxes. But there are ways to simplify and bring your tax bill down by adding a couple of entities. That second is to try and insulate liability into smaller chunks than if you're just in one big company and something went wrong anywhere, everything you have is at risk. Then you just compartmentalize it a little bit so that you can take care of the third thing, which is keep different businesses in their own little modules so that you can pick and choose what to buy, what to sell, and you don't have this big complicated thing to unwrap. So those are the three reasons to pay attention to organizational structure. If you are making money in your business now, it's time to start thinking about these things, especially since you're over the biggest hurdle that there is, which is building this thing in the first place. Congrats on getting that far. Now let's look down the road at what's next. You all take care. Have a great week, and we'll see you on the next Cash Flow Podcast.
I hope that video was helpful, and I hope you subscribe to my channel for more information on finances in your business.